Hi, everyone. Today, let's talk economic reports upcoming. Then we'll talk iPhone sales just for a minute. And then we'll move over to the charts. And then we'll look at my results for today and my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So for calendar, we have initial jobless claims tomorrow. That should give us a better understanding of the jobs market. This continues to look good. That means the economy is doing well. And then we have PPI here on Friday, kind of like a precursor for the CPI that comes out next week. If this continues to be strong, CPI might come out strong. And then Tuesday next week, we have core CPI, the big CPI report, year-over-year CPI, and core CPI year over year. So all at 8:30 Eastern time. So right at market open, all that information will come out. And that will greatly affect the markets, obviously. Moving over to iPhone sales, they say estimates keep falling. Wall Street's estimates for iPhone sales continue to go lower. And of course, this is causing Apple to go lower, which is generally going to weigh on the S&Ps and the NASDAQ. They say they now expect about 75 million units versus the previous forecast of 82 million. And other analysts have cut their estimates by more, between 10 and 20 million units, and they continue to lower these forecasts, marking 56 million in March, which was slightly below the 58 million consensus. They reference the plant that's in China, which does not return to full production until early 2022. So with demand cutting down, they're not able to process as many iPhones, and demand is slowing down as well. Either way, this is bad for Apple, which is bad for us as investors, especially if you trade the major indices. Apple seems to be struggling right now, and we'll take a look at that later in the charts. Moving over to the S&P 500 on the hourly chart, you can see the day today was basically sideways price action. We had the low close of yesterday at 392.50. We did gap below that and then rallied back above, and then we held that level throughout the session. So to me, today looks like consolidation, getting ready for that little bit of a retrace that we're expecting. We did kind of get it here in the midday, but it was quickly rejected, and it didn't hit my price targets either. I do expect this to go a little bit higher than here for a true retrace, somewhere in this 398 range, maybe to 400, back into this previous low level. So really 398 to 400 should be the area for that pullback, and then I would expect a continuation from there. Moving over to the NASDAQ on the 15-minute chart, just to show a little bit more detail of the day. A little bit weaker here. We did gap down, came back and filled the gap, and then we chopped around right at that same level. But we did not hold that level. We went above and below it multiple times. This was some pretty tough day trading here on the NASDAQ, which is my preferred stock. So tough trading, not too bad though. This is what I like to call an inside day. So once we have the high and the low of the day set in pretty early in the day, then you can start to sell the highs and buy the lows, and you get a little bit of choppy price action. And generally, we went sideways. Similarly, here we have that trend line sitting right at 285, which is the price area that we talked about yesterday. Seems like we're set up for that move higher, come up and retest the 144 EMA on the 15-minute chart. If we move over to the hourly chart here, you can see exactly where that's at, pretty much right where I expect the 144 and 55 EMAs to be tomorrow, continuing to trend down into this zone, which was a previous level here. And if we extend this trend line out here, it puts us right in that same zone. So we have a bunch of crossing trend lines right at 285. And then I would expect it to fail at that level, might overshoot just a little bit just to give us a little bit of extra demand to the downside. But I still expect this to fail here, just waiting for that retrace. And we get enough sellers to get the continuation down. Looking at the Russell, very similar to the S&Ps, tested that low, did not break it. Looks like we're fading a little bit here after hours, weak into the close. That's not what you want to see. But you can see RSI is still moving to the upside here, even though we are at the same price level. So we have some divergence here on the hourly chart. And I still expect this to come up to around 182, maybe even up to 183, somewhere in this zone, which again coincide with the 144 and the 55 EMAs on the hourly chart. Moving over to Apple on the 4-hour chart, we have this big double top formation. This looks weak. We do have a double bottom here at about 135, 134.50. And you can see what this structure looks like. We're kind of going sideways, trying to make small rallies, but not really working. Consistently making lower highs here and higher lows. So sideways price action. But this looks like we're going to make a lower low here. And if this retraces with everything else tomorrow, we make a lower high here, then that's going to spell lower prices for Apple, which is going to lead the rest of the markets downwards. It's worth noting that we are oversold here a little bit, so we do need a little bit of that retrace to give us more space to move to the downside. Moving over to transportation, this looks even weaker than the others. We didn't gap down, surprisingly. We did chop sideways after the big green bar to close out Tuesday. Went sideways for a little bit, and then the last 3 hours was straight selling, and it looks like we broke those lows just by a little bit. Hopefully we get a little bit of sideways chop just to give the major indices a little bit of time to rally. But if this sells off and the major indices go up and we get that divergence, that's going to be another indicator that we're looking for more downward price action. Moving over to top gainers for the day, we have YETI. This is a very strong chart, solid bottom in here at $30. Came up, retraced, touched the 144 EMA on the daily chart, came in, retested the 21, and then we're moving higher here, it looks like. So strong price action on YETI, probably something that I should be paying attention to. And this is a good price area for my IRA as well. Moving over to stocks above their 200-day moving average. On the daily chart, you can see we're continuing to slide to the downside. Momentum is picking up to the downside as well. This is certainly not looking good. It means that more stocks are starting to the downside. Even if we have a few that are rallying and some that are moving sideways, the total number participating is declining now. Moving over to the SPX over the M2 money supply. I did get a question on this chart and why I talk about it. Basically, this gives you an idea of how much money is in the stock market versus how much money is out there available to be invested and whether the total amount of money is going up along with the stock market. So you can see we're in this current downtrend. Currently on the weekly chart, we're moving down as well. But the reason that I like this, you can see here we have the high in November of 21, which is actually at the same level as the high in February because this is a ratio. So you can see these are the same level, even though on the S&Ps, the high in November of 21 was much higher. But relative to the high of pre-COVID and how much money is out there was actually at the same level. So what we can see here is as we move lower, we're getting into some areas historically where we found some buying. December of 2018, we had the lows, COVID lows, and how low relative to the COVID dip we got already with the lows in October. If we do come down and retest the lows of October, I don't think we're going to go any lower because that would be indicating that we are getting pretty close to the amount of money relative to the stock market as during the COVID lows, which doesn't seem reasonable in terms of prices, in my opinion. If I zoom out here quite a lot, you can see the pre-Great Financial Crisis highs here, also in the same vicinity relative to where we are now, and the amount of money, very similar levels here. And then we have the lows here in 2016, which was actually a very similar ratio to the lows here for COVID. So this just gives you a kind of a perception of where the stock market is relative to how much money is available to be invested. And again, this chart to me says that we're not going to make new lows on the S&Ps, but if we do come back into this area in this ratio, that's going to be a pretty good buying opportunity, in my opinion. Moving over to the dollar on the hourly chart, you can see from about midnight to the morning session here, we went straight down. Then we did move up here slightly during the session, but my guess is that this is going to get a continuation down here, which would coincide with the rally that I'm expecting. If the dollar does move back down to these previous levels, about 104.50, that should give stocks a little bit of a jump that they need to go a little bit higher. Moving over to JNK, not quite the same story here. So we did move down yesterday, but we actually rallied through the session here today, indicating that we have some divergence between growth and JNK, which is a pretty good indicator that we should see some upward price action in growth and the NASDAQ tomorrow. Moving over to TLT on the daily chart, you can see we gapped up huge and rallied right up to that 110 level that we talked about. So that rally should be stalling out here pretty soon. Does still have some strong momentum, certainly could go higher, but we're getting oversold on the daily, which generally is a pretty good indicator that we're going to start to slow down, if not retrace a little bit. You can generally see that we're pretty extended above the moving averages as well. We do get a little bit of a retrace, maybe 102, something in this zone. That could be a good opportunity to get back in as this 55 EMA starts to move back to the upside into this area. It seems possible that TLT could come back and double tap that 55, giving you the opportunity to enter. Finishing up with the VIX here today, you can see this did start to slow down. Momentum starting to move to the downside here after the big rally. This is the first time we're turning red since the gap up here, so definitely looks like we're going to get a little bit of a retrace in the VIX, which should give us the opportunity for stocks to rally a little bit. Then we come back down into this maybe 21 to 2130 area back here. Might be a little bit too far, maybe 2150, somewhere back here. And then once we hit that area, it should continue higher in my opinion. Moving out to the daily chart just to see what that looks like. We did continue higher through that 21 EMA. So this is a little bit different now than the stuff we've seen previously. On this move down, you can see we came up and tested a few times, but we did not have a sustained move like this. And if we're comparing to the previous rally in August, you can see big gap up, quite a bit stronger here in August than what we're seeing right now. But even with this big move, we did see that retrace initially before we continued higher with the VIX. Moving over to my accounts, you can see I once again jumped in a little bit long here on the IWM. We'll see if this pans out. It does look like the markets are going to move a little bit higher, and the IWM should be one of the stronger ones. It's not weighed down by Apple the same way the other major indices are, so I expect the IWM to do fairly well. The chart did look strong today, similar to the S&Ps, but it doesn't have that big element of Apple sitting in there, so hopefully the IWM does okay in the morning. Not opposed to selling these shares if we get up to maybe 181, 182, just for a quick profit here. That would be okay. And then looking at the Qs, all I have left is just these minus 200 shares and the 2 puts that are covering there. You can see I have a big credit on these shares, so the market would have to rally quite a lot for me to lose money tomorrow. Based on these puts at 286 with a $6 credit, the market would have to rally to over 292 for me to lose any money. Of course, I could have a smaller profit if the market does rally past 286 tomorrow, which I don't think is going to happen. I expect these shares to get executed tomorrow, and then we'll start to look to the downside once we start to get those indicators that this retrace is starting to fail. Looking at results, I did make $114 today. Should have been a little bit better, but not bad on a day where the market was down about 0.5%. Let me know down in the comment section if you think the market is going to rebound or is it going to sell off. Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.